Good afternoon, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, arbitrage opportunities can dissipate quickly. So, as a rational trader, I am very, very much in the camp of the markets are inefficient. And depending on your time frame, inefficiencies can last a very, very long time, or they can last a very, very short time. Most cases, the market does self-correct. And so when an opportunity or an arbitrage opportunity is present, the big institutions will often pounce, thus eliminating the opportunity. So once you identify that opportunity, get in your trade, but then keep an eye on it, because once the opportunity is corrected, that's your signal to exit. And that's exactly what we did today, fading volatility with the SVXY. Pre-market, the volatility index was making its way below 18 and down another 2.5% after an impressive move lower yesterday. What was the SVXY doing at that time? With the volatility index down 2.5 percentage points, the SVXY was only down fractionally. So I should say, sorry, up fractionally. So it really jumped out at me. You had the Dow futures pointing lower simply because of United Healthcare's disaster, but you had the NASDAQ higher, you had Bitcoin, the ultimate risk on indicator, higher, you had the paradigm shift of Monday when the China-US trade agreements took a big step forward in a positive way. So again, triangulating all of the pieces of the puzzle suggests that there was more room to run here, that volatility was going to continue falling today. And so it didn't make sense that the buyers of the SVXY would be hesitant to bid up the price because perhaps they were fearful that, oh, this is just a head fake. Nothing's really changed because it's 90 days. Sorry, folks, the paradigm shift has happened and we are off to the races. We have confirmation that the 200-day moving average is going to hold, and we've got a lot of runway to move even higher from here. So all of those indicators pre-market had me screaming for ownership into the SVXY. We did just that. We got in right around 41.65, and you can see, look how quickly the arbitrage evaporated. I put a target on at 41.90. We got out at 41.96, I believe. We pocketed 62 basis points today, and we got out of Dodge all in about 30 minutes or so. And then what happened after this is right around when Trump started, well, I guess it was over here that Trump started speaking again in Saudi Arabia, and nervousness crept back into the market. We didn't really go much anywhere. The reason I'm telling you this is because that sets the stage for tomorrow's action. Again, more trepidation. If I see futures pointing to a lower open and the volatility index hanging in there around 18, I am betting big on the volatility index going back down to 15 and below here in this little mini run between now and the Memorial Day holiday. So good stuff, folks. There's going to be arbitrage opportunities, but they might not last very long. So be diligent with your trading, and I'll be back tomorrow with another video. This is JD. Take care, everybody. Have a great day, and we'll see you next time.